Good afternoon, everyone. Hey guys, this is Bruce Marshall with Simpler Trading doing the nightly market update for Wednesday, April the 12th. So happy Wednesday, happy hump day, happy CPI day today, and happy FOMC day today. So we had a lot going on with the market. If you were trading, you are aware of this. Let me move this down for a minute and we'll take a look at everything and jump right in and talk about this. Now, if you've been following what I've been saying, I don't know, it feels like a while now. We've kind of been in the same wide range bound market, but with these intraday wild swings, which makes it trickier to get any kind of read on the market, and that situation continues. But let's look what we've got going here. We had in the overnight session, very quiet. This was CPI, was released this morning. Been waiting on that. CPI, big gap up. Everything looks great. And this is opening bell right here. Came back down. I thought we probably would consolidate and then continue up higher here on the day. And instead, we just, kind of came apart here. Big run up here like we're going to do something. You see that skyline? We hit that 3 times, failed, 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 and this last time we just kept going. So top to bottom, I think was about 65 points or so. Not in the favor of the bulls. I had been looking for this market to go higher, and on CPI, we knew that was probably going to be a lower CPI number, a lower increase, I guess is the best way to put it, which is good for the economy and all that kind of stuff, meaning the Fed won't have to raise as much and so forth. And that's really what we got. But the FOMC Minutes came out, and that came out right here. Let me highlight this. I'll show you. That came out right here. Actually came out right here, and then they go pour over the minutes and all that kind of stuff. And the Fed sees a lot of increasing danger, red flags in the banking sector, that's going to slow down the economy more than expected and all that kind of stuff. Lots of red flags going up around, the banking kind of crisis slash fiasco stuff that's been going on the last several weeks. So that's not good either. And they are saying that the Fed is saying that it looks like that we might go into a mild recession at some point. And all this, and I continue to think that's laughable because everybody knows we've been in a recession for a while. But if you've got one indicator saying this or that or whatever, I guess you can make it look however you want to, I suppose. But whether it's official or not, we have parts of the economy that are strong and parts that are not strong at all. Prices continue to be elevated and all that kind of stuff. From inflation, all that kind of stuff, and that's what Fed's trying to get ahead of. So the thought and the hope was that, or still is that, the Fed will be able to contain this, but it's going to take longer, even longer than I thought. When this first started, I was saying, this is a cycle. It typically takes 12, 18 months. Well, we've been in it for 12 months now, and it looks like we may still have a couple of more years left on, working this out. And that obviously can change very quickly and dramatically based on what happens in the economy and so forth. But we're definitely not out of the woods yet. So let's look at the market here. Let's go back a little bit further. Let's go back to our 20-day chart. And let me switch these back over to my normal voodoo lines, which are these colored lines on the screen here. And what you'll see, this is our voodoo fire line. Now, these are based on Elliott wave. That's probably the strongest one of the lines. These are sky lines. We came down here. This was again, this is a 20-day chart, and we've been holding above this fire line here, and we got to 41.77. Now this is ES. It's about a 20 3-point differential between that and the SPX. But the ES trades, 24/7, or well, it trades overnight, put it that way, not 24/7. So therefore we can get a lot more clarity on our, on our data, as far as having overnight data to get a lot more accurate levels, right? So let's back this out, and I'll show you what I'm looking at here. So if we go to a 1-year chart, again, as you can see, we've come back up above our fire line here. We've been above it quite a few times. This trailing 1-year chart. We're above it now, and I've been expecting that we come up here at least to this number here, which is 4,200. And I've had trades placed around that, and we've gotten close. We're really close a couple of times here, and we're fairly close now. Above that, I kind of not sure that we're going to go there. I think there's a pretty decent chance we come back down here. If you look at this range, we've been trading in this kind of wide range here. Again, this is a 1-year chart, so the vast majority of the time during the year we've kind of been in this range, a little above, a little below, but again, kind of vast majority of the time go up, come back down, go up, come down, up, come down, up, come down. Just a lot of noise and chop. I think that's probably where the next move down will be lower here. The question is, how low do we come back down here, or do we get into something more meaningful down here? And there's no way to know. What we always look at, what's the next data points, what are the next events coming up. And tomorrow morning we've got PPI, which could help us go up or down. The bigger thing probably starting Friday, we've got bank earnings. We've got JP Morgan, Wells Fargo, I think Citigroup report on Friday. So everybody's going to be watching the bank sector. How are the earnings? And more importantly, what's the commentary from the earnings as far as outlook in the banking sector, strength or weakness, that kind of thing, because that's what the Fed is really focused on right now. So let me show you my calendar here. So Friday, bank sector kind of kicks off. Next week we've got Tesla. I think Netflix reports on Tuesday too. A bunch of earnings start coming in here over the next 2 weeks. The big earnings will be this week on the first week of May, which will be, see that fourth? This will be, if it all falls out this way, and I do not think they're confirmed, but they do like to do this. I think we'll have Google. I think we'll have Google, Amazon, and Apple all on the same day on that Thursday the 4th after the close, I believe. But guess what? On Wednesday the 3rd, we have a Fed meeting. So big week here, 1st of May. And these next 2 weeks will be pretty big too, with a lot of earnings coming out, a lot of implications for strength or weakness in the economy and all that kind of stuff. So definitely keep an eye on all that. And as far as trading goes, it's kind of more of the same. We've been in this, again, it's hard to get a direction, because here, even on a longer term time frame, this is a whack-a-mole market, right? But again, then you zoom in here on, like, say a 10-day chart or 20-day chart, and it starts to get really really crazy. It's hard to trade this stuff even on an intraday basis. Straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down, over and over and over and over and over. Have a couple of spurts of long run of, this is when everybody got so bullish, and then they started not getting bullish here, and we, again, we're very close to that 4,200 level. Above that, I'm not so sure we're going to get without some kind of good news, and I don't think we get that even above that until we hear something much better from the Fed. So we shall see. So if you're trading this, be careful. Again, and as always, as has been the case lately, tight stops, limit your risk as far as if you're doing options, number of contracts you're using. Watch your risk, learn how to manage trades very well. That's critical in this market, in every market, but it's even more critical now when you can get whipsawed on a trade pretty quickly. So with that, let me wind it up. Hope that helps. Hope it makes sense. Just be careful in this market, because it can still go either way. But lots of news and events coming up over the next couple, 2-3 weeks, and I more than anybody want to get some clarity on this market to, so we can start getting better feel for trades and direction, all that kind of stuff. And I don't think we're going to be there at least until we get past that Fed meeting in May. So hope that helps, and I will see you guys at the next update. Thanks.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me.